Hello, everybody, and welcome to Commodity Culture, where our goal is to make you a better investor in the commodity space. My name is Jesse Day. Before we dive in, standard disclaimer, nothing here is investment advice. Do your own due diligence. We bring you the information, you do your own research. And today's guest is a renowned investor in the commodity space, the former CEO of Sprott US Holdings, and the current president and CEO of Rule Investment Media. It's Rick Rule. Great to have you back on the show again.
Jesse, a pleasure to be back with you. Thank you for having me.
It's been a while since we last spoke, so I want to start with a bit of a broad question, and that is, what are the main themes and trends you're currently watching when it comes to the commodity space in particular that you think more investors should be paying attention to?
I love the disconnect between commodity prices and equity prices. There are people who were employing short-term strategies in a long-term narrative, which is to say, they believed that the uranium price would go up over 5 years, and after 2 months, they got bored of it. The same thing for copper, the same thing for oil and gas, the same thing for gold. I see myself sort of as a pawnbroker for impatient people. They seem to get the big picture right, but they seem to employ short-term tactics around long-term narratives. And I love to be on the backside of that trade. So I've been a fairly consistent deployer of capital for the last 3 weeks into the disgust of people in the sector. I note that, as an example, the gold stocks have caught a bid now. But if you look at the bid that they've caught relative to the margin expansion that you are beginning to see in the big miners, I think that the bids they catch over the next year and a half will be much stronger. I would caution people not to listen to me at all if your timing involves being concerned about holding stock over a long weekend. I'm no trader.
Hey guys, just a quick break to hear from today's sponsor, ARC Silver Gold Osmium. They offer personalized service and competitive prices with no minimum purchase for silver, gold, platinum, or osmium. Here's just some of the comments left on this YouTube channel about ARC SGO and owner Ian Everard. Have bought from ARC, good source and price. I cannot say enough good about Ian and his company. He is the most honest individual I could find in order to buy precious metals. If you are looking to buy precious metals, I recommend Ian at ARC Silver. He is a straight shooter. So go to arcsgo.com and contact Ian Everard today at 307-264-9441 or by email at ian@arcsgo.com, and make sure to tell him that Commodity Culture sent you. Yeah, it's funny. I used to think you were exaggerating when you said most investors' time frame is a long weekend, but some comments I get on the channel lead me to believe that that's actually true sometimes. People lambaste me if I don't post an interview the same day. This is old news now. Guys, I'm trying to bring you timeless investment principles that you can use, but some people just don't have the patience. I want to touch on gold, reaching all-time highs in nominal terms. The results have been mixed for gold miners, as you mentioned. Agnico Eagle hit all-time highs. Barrick and Newmont still quite a ways off their highs. When we go to the juniors, the mid-tiers, the juniors, we see a disconnect, as you mentioned. People were expecting a much higher rise in the miners. Talk to us about why you think that is. And you mentioned you think moving forward that gap will close, right? How do you see that occurring?
Well, first of all, congratulations for saying nominal all-time highs. When people do gold in constant dollar terms, we would probably need 27.50 or 28 to have a real breakout. So it's good that you differentiated that for your audience, because many people don't understand that concept, which is distressing, given that the purpose of gold is real as opposed to nominal savings. Now, to your question. Bull markets traditionally follow a fairly consistent path, which is to say, in commodities, the commodity moves first, and then the biggest, most efficient producers who can turn that commodity price increase into margin increase moves second. The move in the gold stocks has been constrained, I think, because the investment community has a memory of the performance of the gold stocks in the decade 2000 to 2010, which was pitiful. The gold price moved, if my memory serves me correctly, from about $2,500 to about $1,800, which is to say a sevenfold increase in the gold price. And the free cash flow per share on the XAU fell. It took skill to turn a sevenfold increase in the selling price of your commodity into reduced cash flow per share. So the expectation around the gold stocks, not merely in the general investment sector, but specifically among gold investors, is a terrible pun, but tarnished. What I think people are missing is that institutional investors in particular and sector investors are holding the managements to much higher standards now. And I suspect for the next 2 or 3 years, at least, that there will be much more fiscal discipline in the sector than there was. You mentioned Agnico Eagle as a bellwether, as a leader. That's because they've been a leader in the deployment of capital for 15 years. It's because they have been leaders in constraining their all-in sustaining capital costs. They've been leaders in selling off marginal assets and upgrading the quality of their portfolio. They haven't been a leader just because the gold price went up. They've been leaders because they've outperformed other companies in the sector. Investors, too, need to look at themselves, what they're trying to accomplish. My own experience has been that when you have a genuine gold bull market, which I think, but don't know, that we're in the early stages of, that the market beta, which is to say, in my definition, the extent to which the gold stocks themselves outpace the broad market, is substantial. And some investors, ones of my age as an example, 71 years of age, might do well to try to construct a portfolio of the 5 or 6 best gold mining companies in the world. In other words, participate in the beta that you might otherwise get with an ETF, but buy the higher quality companies so that you excise operating risk from your portfolio. For those who are, pardon me, Jesse, for those who are seeking alpha, of course, you need to come down the quality trail. You need to come down to the single asset producers that will be consolidated or taken over by multi-asset producers with a lower cost of capital. You may come all the way down into exploration, which has treated me well, but exposes you to a lot of risk outside the gold price. But I think it's important that one of the things that your listeners do, Jesse, is that they assess themselves. They assess how much work they want to put into investing. They assess how much risk they want to take, and they adjust their time preference to reality. You probably know that I have now graded over 80,000 portfolios for investors in the last 6 years. And I've learned a lot about the mistakes that investors make. What are they? Assuming more risk than they realize that they're assuming. Having a portfolio of penny stocks is not the same as investing. It's speculating. Nothing wrong with speculating, but you need to know what you're doing. The second is not doing enough work. I advise people to own the number of speculations that conforms to the number of hours per month that somebody wants to spend researching their portfolios. And by researching, I don't mean listening to podcasts. I mean reading quarterly reports, annual reports, resource statements, proxies, insider filing statements. So if you're willing to spend 10 hours per month, own 10 stocks. Too many people whose portfolios I've graded have owned 60 stocks, and they can't possibly follow 60 stocks. The third thing is to get your time expectation aligned with the time that it takes. If you are expecting a 5-year bull market, which I am, and you're expecting that the bull market will be slow to get started, but also expose you to volatility, don't employ 3-month tactics on a 5-year narrative. It doesn't work. You're setting yourself up for disappointment. That's not the market's fault. That's your fault. Sorry for the rant, but you gave me the opening.
No, this show is all about rants. I had Grant Williams once give a 26-minute answer to a question on this program, so don't worry about that. Are there any gold names in particular in the gold mining space that you think are worth examining further for speculators with the time and expertise to do so? And this is kind of, obviously you gave the caveat there. I personally just stick to streamers and ETFs because I do not have the time or expertise to dive into the development and exploration space. Obviously, the higher the potential reward, the higher the risk, as you mentioned, know your own risk tolerance, but also the more knowledge you kind of need to be able to examine these individual companies and determine if they stand a better chance than most of actually succeeding in the end. So with all of that out of the way, maybe you could just hit us with some of the big names, mid-tier and juniors that you think are worth people potentially taking a look at.
Well, the big names include Agnico Eagle, although it's had a hell of a run. It's worthy to note that unlike the big two miners concentrated in Nevada, they're concentrated now in Northern Ontario. But if you look at their reserves and resources on a 100% owned basis, rather than the 42% owned by Newmont or the 58 or whatever it is percent owned by Barrick, the equivalent ounces are the same. So I'm attracted to Agnico Eagle. You may know that I had Sean Boyd at my Natural Resources Investment Symposium in Boca Raton. I had the great pleasure of having him for lunch and really got to get in his head about how he built Agnico Eagle and how he continues to function as chairman now that he's no longer CEO. So I would consider that the bellwether operator. Endeavour Mining in Africa has sold off like a boulder off a bridge after thanking and excusing their CEO for financial improprieties. It doesn't change their status as a low-cost producer, nor does it change their development pipeline, although there is some concern that some of the operating management left to go to a new company, Lundin-backed, called Montage. But I would look at Endeavour for people who have the courage, the political courage to operate in West Africa. But people really need to focus on the highest quality names. And I would say the highest quality names are, respectively, Franco-Nevada and Wheaton. Franco is particularly attractive because it's underperformed. It has underperformed because an asset which was 14% of net asset value, the Panamanian asset, was at least temporarily nationalized. The arithmetic around this from Franco shareholders' point of view is interesting. The stock declined 42% because 14% of net asset value went away. It shows you that most speculators are very, very, very bad at arithmetic. So I think that's a reasonable smattering of names that people can look at. Coming down the quality trail a little bit, I think if you see any big sell-offs in G Mining now that they've acquired Reunion, that would be worth looking at. A lot of Reunion shareholders owned the stock because it would be taken over. Now that it's been taken over, they have no continuing reason to own the stock. But the truth is that building out that deposit by the G Mining team, the best qualified team in the world to build it, will ultimately develop into a multi-asset gold mining company, which will be higher priced. If the share price of G Mining doesn't respond, I suspect that you'll see G Mining itself be taken over. My hope would be by Lundin Gold. Understand, the Lundins don't listen to me particularly with regards to things like this. Coming down the quality trail again, probably getting to your question, G2 Mining, which is across the property boundary from Reunion, has to be taken over. Goldfields is a shareholder there, probably because they want to participate ultimately in the consolidation of that district, but it has to be taken over. So I think that's something that's worth looking at. It might not happen for 2 years or 3 years. And people who are going to have trauma holding stock into the fall would be well advised not to consider that name. Another speculative name I like a lot is Snowline. Sold off a lot because of the pit failure, or pardon me, the heap failure in the Yukon. The idea that an advanced exploration stage project sells off because of a temporary hiatus in permitting in the Yukon is hugely amusing to me. This is likely a 10 million ounce plus deposit, very good grade. Yes, there are challenges. It is in the middle of nowhere, but the exploration upside hasn't been factored in. So provided, Jesse, that your listeners do what you instructed, which is to say have a speculative bent and are willing to do the work, those are some names that I think are more likely than not to work.
Fantastic. Well, let's shift over to silver mining space. Obviously, feels like there's a ton of upside potential there. A much smaller space if we're looking at pure play silver miners. It feels like, and I may be wrong here, but it feels like there's more jurisdictional risk overall with the pure play silver miners, as a lot of them are operating in South American jurisdictions that seem to be facing issues with governments. What are your thoughts on that, and how do you personally approach the silver mining space?
First of all, with regards to political risk, people tend to overreact to political risk they don't understand. To put it in politically incorrect terms, people like you and I, white people schooled in English, seem to believe that money stolen from us in English by white people according to the rule of law is somehow less gone. I don't consider British Columbia, as an example, to be a substantially less risky political jurisdiction than either Peru or Mexico. It's just that the risks are different. Investing in British Columbia, if I'm investing in the territory of the Tahltan, First Nations people who I know and love and trust, and I believe will protect me from the political vagaries of Victoria, is a different circumstance. But the political risk in South America is a political risk we understand less well. The risks in Peru have to do with the fact that the rents from mining have always gone to the capital, Lima, while the regions literally have gotten the shaft. That is something that you need to take into account if you're operating in Peru. It's important that your company have very, very, very good local community building relationships, because the center in Peru is pro-mining. The regions who have been victimized are anti-mining, and you need to deal with that. Similarly, the political risks in Mexico are different, but I wouldn't consider them to be greater, as an example, than the political risks in British Columbia or California, or other Caucasian people's republics. So I think it's important to understand the risk. The bigger risk in the silver miners is that too many of the junior silver miners don't have any economic silver. That's a much bigger risk. Governments don't steal something that isn't worth stealing. So you should substitute political risk for technical risk. You want grade and you want size. It is true you have greater optionality in a silver bull market with the quote bullshit silver mines, the people who have great narrative, tiny market caps, and can promote well in a liar's market. But there's too much risk assuming that somebody even dumber than you is buying a burning match after you buy it in a bull market. So you want the higher quality names. And the higher quality names aren't markedly more expensive, or frankly, are often less expensive on a net present value than the more speculative ones. Want silver? Look at MAG, a big, big, big silver producer. Way too much G&A. Way too much G&A. All they really have to do is audit their partner, Fresnillo, and they pay themselves very, very well for doing that. Meanwhile, world-class ore body. I'm attracted to the discoveries made by Vizsla Silver. I'm attracted to the discovery made by Abra Silver. I'm attracted, although it is expensive, to the superb operating performance of Aya Silver. I mean, these guys have just knocked the ball out of the park operationally. I'm impressed, too, with the operating performance of Silvercrest, although I need to see a new reserve and resource statement to increase my confidence about the fact that this is a long enough lived ore body to give me the net present value that I'm hoping for. Silver investors need to understand that silver generally lags gold in a bull market, depending on how far the way through the bull market we are. My experience has been that when the generalist investor buys into the precious metals narrative, that's when silver leads. Until then, when it's still a fear market, gold leads. The point of all this is don't, again, buy into the silver market with a short-term narrative. It's not a short-term trade. The spark hasn't been lit underneath silver or silver stocks. You do it with uncertain timing because the rewards for success are so incredible. As Doug Casey points out, when the generalist investor comes into the silver space, the market capitalizations of the legitimate silver juniors are so small that, as Doug says, the result is like trying to siphon Hoover Dam through a garden hose. There is not enough room in the sector to handle the money. And the returns are berserk. I probably now have 2.5% of my portfolio in the silver equity space. And it wouldn't surprise me to see that 2.5% of my portfolio become 25% of my portfolio. I'm not saying it's going to, but that's what tends to happen when you come into a silver bull market. And if we do come into a silver bull market, Jesse, I hope that you're leading the bandwagon with your listeners to tell them to sell some. You haven't made the money until you've taken the money. And if you're one of those people for whom the narrative gets more valuable as the price goes up, you will be a victim. you will buy my stock.
Absolutely. Let's talk about uranium, my favorite commodity. Uranium stocks have sold off recently to some extent. People are crying on X, claiming that the thesis is dead. People coming out and saying these uranium bulls need to explain themselves, and other crazy posts like this, which is pretty funny to see because, as you mentioned, you have to be looking at a longer term time frame. A lot of these people bought uranium stocks after the Sprott Physical Uranium Trust came out at that time. All the stocks were at their all time high. They haven't retraced to that level since, so people feel ripped off. That they're more tourists who've jumped into the trade because of the hype on social media, I think. I bought some more recently. I'm watching and potentially going to continue to add to positions. What are your thoughts on the uranium sector right now? Is this a buying opportunity in your view?
Jesse, I think I'm early, but I've been deploying to the space. As you know, I love hate, and I watch social media too. I remember a couple of years ago when I was selling my uranium stocks, I was widely pilloried on social media. This guy snatching defeat from the jaws of victory, all this kind of stuff. Now that I'm buying the things, I'm subject to a lot of abuse, and there's nothing I like as much as abuse on social media. I'm almost always early because I have a very rational mind. I believe if A is true and B is true and C is true and the logical consequence of D is D, I confuse the words imminent with inevitable. And I suspect I'm early in the uranium trade. But the truth is that uranium has paid me such extraordinary rents that if I'm a year and a half early, it doesn't matter. I suspect that my portfolio of junior uranium stocks has a 3 or 4 bagger left in it. Let's suppose I had to wait 3 years for a 3 bagger. Would that be a terrible outcome? I don't think so. For the people who are frustrated with their high quality uranium juniors, if your portfolio is causing you trauma, then sell. The essence of wealth is enhancing your sense of well-being. If you're not prepared to be a contrarian, buy short-term treasuries or something. Just understand that if you're selling that portfolio of high-quality juniors in the next couple of months, you're likely selling some of it to me. And thank you.
Yeah, and I think people are also allocating capital to this space, and this kind of goes across the board, that they can't afford to lose, or that they're banking on to fulfill some future obligation, like I'm going to use this money to buy a house, I'm going to use this money for something specific, and then the prices drop, their deadline comes at hand, and they're kind of forced to
So
sell
true, Jesse.
because they
Do
thought
not
uranium would be going to the
use
moon. Yeah.
do not use as speculative capital money that you can't afford to lose a substantial portion of. That's the other thing that I see grading these portfolios. I have a question section at the bottom of these portfolios where I allow people to ask me questions. And if they're interesting enough, I answer them in my classroom. And so many people say, I have $50,000 to speculate with. I would like to put it down at $250,000 down payment on a house within 3 years. And, you sort of ask them to revert to their youth and believe in the tooth fairy or something like that. The goals and the means are completely inconsistent. I understand that people want this to occur. I would just disabuse people of the sense that their wants somehow matter to the market.
Absolutely. Cash you're saving for something, put it in short-term T-bills, money you can afford to lose, speculate with it. Let's talk about some names in the uranium space. I want to also pose the question of your thoughts on NexGen Energy to you as well. You interviewed the CEO, Lee Courier. They've been a subject of much debate online in terms of their G&A expenses, things they choose to do, such as sponsor a racing team, sponsor a hockey team. Their purchase of uranium at quite a high price in the eyes of many. Their explanation for purchasing said uranium to provide some sort of insurance policy for long-term contracts. That didn't sit well with a lot of people. Maybe we'll start with your thoughts on NexGen. Is this just a situation where the deposit they have is so good that, once institutional money starts to enter the space, NexGen is going to be a natural attraction? Once the generalist starts to enter the space, they're going to look at NexGen first. Is this a matter of maybe you can kind of hold your nose and ignore all of those other things? Or do you think there's real cause for concern when it comes to NXE?
The answer to that is yes and yes. I own the stock because it's the best undeveloped uranium deposit that I know of in the world by a country mile. I think it has to be bought by somebody. Let me rephrase that. It doesn't have to be bought, but I think it will be bought by somebody. So let's deal with the various issues that you rose. Their promotional strategy is idiotic. The concurrence of Formula One watchers with uranium stock owners is non-existent. That was just idiotic. It was an ego play at best. It was something that was amusing for the management team. It was despicable and it was deplorable. Next, they did it. Do they pay themselves too much? Yes, they pay themselves too much. Is what they pay themselves too great a cover charge to be involved in the best undeveloped uranium deposit in the world? No. And the truth is that they have added an awful lot of value while paying themselves too much. They have consistently de-risked the project and consistently advanced it to production. De-risking a project is how you get a project taken over. Should they have bought that uranium? Yes. The future of the uranium development finance business has everything in the world to do with term contracts. In the uranium business now, in the contract market, you can pre-sell for as long as 20 years, importantly, long enough to amortize the construction loan, which means that junior companies, which couldn't finance high upfront capital cost deposits in any other commodity in the world, can finance uranium projects, particularly if there's a hell or high water part to the contract, where the first couple of years of production, if there are shortfalls, can be met by physical inventory controlled by the company. The financing mechanism that was used to acquire that uranium was overly expensive. Was it designed to cement management control? Perhaps. Was the group that bought into that financing highly intelligent to do so? Let's just say I wish they would have let me in that financing. Having a convertible preferred, senior secured against physical inventory, paying that interest rate with that conversion feature, that was a gift from God. And it was a gift from God at the expense of existing shareholders, myself included. When I do a net present value of what I think that deposit could be worth, I can't help but own it.
And are there any other names right now in the uranium space you think are worth taking a look at? Obviously, there's only two large producers at the moment, Cameco and Kazatomprom. There's various projects in different stages of development. We have a few companies now producing in the United States as well. Which companies are you watching right now in that space aside from NexGen?
I'm watching the waterfront. I am still a Kazatomprom shareholder. I don't like the turmoil in middle management at Kazatomprom. I obviously don't like the fact that the government of Kazakhstan has decided to increase their social take, although I'm used to that. I remember a conservative government in Canada doubling the natural gas royalty. So I understand that the job of governments is to steal. I am still a Cameco shareholder, although I'm concerned about their ability to operate the Westinghouse assets. I understand strategically why you would like to be a cradle-to-grave energy supplier in the uranium space. I just wonder if anybody has the ability to operate 7 or 8 businesses as opposed to one. Time will tell. If they pull it off, it's a long, long, long ball home run. But as I say, time will tell. I like the fact that Paladin and Fission have sold off. I'm particularly attracted to the Fission part of the transaction because of the arbitrage implicit in the Paladin to Fission transaction. But I like the fact that Paladin has already executed on their production strategy and has the ability to go to the term market and finance at least 2 more projects into production. My hope would be that rational heads prevail and that Fission vends Paladin vends the fission asset into at least minority ownership into a consolidated Western Athabasca play, including NexGen, there is probably $500 or $600 million in duplicate infrastructure to build those deposits. The idea that you would build them separately is as stupid as building Akati and Diavik, the two diamond projects 19 kilometers apart from each other, which were built separately in the Canadian Arctic. Only an industry as dumb as mining would do something like that. And I hope that doesn't occur in the case of the western part of the Athabasca Basin. I'm less attracted, frankly, to the American players. I think their stocks will perform well because I think Americans are ethnocentric, and they will somehow believe that American uranium is worth more than other uranium. Probably the best part of uranium in America is the consistent stupidity of the American government, who has gone from 5 years ago trying to ban uranium to now deciding to subsidize it for $4.6 billion. The idea that American uranium producers get a direct subsidy and an indirect subsidy in terms of credit guarantees, while it is horrific from the point of view of American taxpayers, is hilarious from the point of view of shareholders in American-based uranium entities.
I want to stick on the theme of nuclear energy and turn to what's going on in Germany. A video surfaced on X of the cooling towers of a nuclear power plant being blown up and destroyed as they no longer plan to use it. It seems like a symbolic, like burning the ships. We have no way back. We're all in on green energy, or in this case, they're burning record amounts of lignite coal, which is completely insane. What's your take on all this? Because people were saying eventually the German government's going to capitulate. They're going to eventually adopt nuclear energy once again. It seems like they're just intent on destroying their energy infrastructure. What are your thoughts there?
It is interesting that video surfaced concurrently with the Chinese government giving financial approval and technical approval to a total now of 8 new nuclear power plants. Doug Casey fantasized 10 years ago that Germany would turn into a petting zoo for China. And who knows, maybe he was prescient. The Germans have done many things well over the years. But the idea that you would rely, as an example, on solar in a place where the sun doesn't shine seems very odd to me. The idea that you're trying to be green while increasing your consumption of high sulfur, high ash, lignite coal also seems strange to me. I don't think there's a requirement for wealthy countries to become stupid, but there seems to be a trend for wealthy countries to become stupid. And I think Germany is the poster child for that. This will not have a happy ending. You need high quality baseload power. Now, Germany, of course, will have access to high quality baseload power because they'll import power from France, nuclear power. But we have to get from here to there first.
And speaking of stupidity by rich countries, Kamala Harris has announced she is now planning to give every new homeowner $25,000 towards buying a new home. This is on top of her pledge to put price controls in place when it comes to groceries, rent, medical expenses, and a good old Soviet Union style policy blanket she's got going on. It's the most insane thing I've seen in my lifetime from a politician in the West in terms of promises being made for votes. Is your average voter going to buy into this, and what would be the implications of these policies if they're actually implemented?
Sadly, the average voter seems to be inclined to accept a bribe with his or her own money. Understand where the money comes from. The government doesn't have any money. The only thing they can redistribute is what they steal. Now, let's look at the implication of a $25,000 gift to first-time home buyers. What's the logical explanation, given that we're about 3 million units a year short in construction? The logical implication is that the prices go up by at least 25%, or pardon me, $25,000. I mean, I need to say, rather than just getting the Democrats in your audience angry, I'm going to get them all angry. I will not vote for any of the three stooges. I will not vote for Harris. I will not vote for Trump. I will not vote for Kennedy. None of them are talking about limiting the growth of government. None of them are talking about cutting spending. Trump is talking about a tax reduction without a spending reduction. That's fraud. It's your children who pay. Kennedy basically is Bernie Sanders in drag. So I'm not going to vote for any of the Three Stooges. I will not vote for anybody who doesn't talk about radically decreasing the size of government expenditure, which likely means, except for voting on spending initiatives in local elections, that I won't be voting for the rest of my life, because these idiotic proposals, these narrative-driven proposals that ignore arithmetic and frankly ignore fairness, are extremely popular with the voters, which is why they're being trotted out by the politicians. People are concerned today because, what's his name? Biden appears to be senile. I think I want a senile president. I think I want somebody who does less. Looking back on presidents in my lifetime, my two favorites were Reagan, who had a habit of taking naps during meetings, which I think is a wonderful use of a president's time, and Jimmy Carter, who spent a lot of time organizing the schedule for the tennis courts at the White House for his staff. That's what a president should do. A president should spend his or her time organizing leisure activities for their staff so that they spend less time looting me. That might sound cynical, but the truth is, after 71 years, those people have earned my cynicism.
I have to get your thoughts on Javier Milei in Argentina and Bukele in El Salvador. Do you think they're leading those countries in the right direction economically? Obviously, Bukele also cleaning up a lot of crime, sometimes through jailing everybody in sight who is connected with to a potential gang without due process, which some people have pointed out. But I wonder, because social media is aflame on X in particular, with stories of how they're both complete heroes. They're completely reforming their country, sending them in the right direction. This is the example of what a real politician should be. This is what Western politicians should do. Is that all hyperbole? Is there any substance behind those two politicians in particular?
Two very different circumstances. Bukele is for the power of the state, with him in charge. He isn't for smaller government. He's for different government. He happens to believe that cryptocurrencies are a reserve asset, and I don't believe in central banks. I would like him to be able to allocate $10, and he can allocate it to whatever reserve asset he feels like. So I feel very differently about him than I do Milei. Now, Milei is a different set of circumstances. He has been aggressively reducing the size of government. And what he has said is that when he is successful, he will be irrelevant. I gotta say, I'm not sure if he can pull it off. I'm not sure that the Argentines have the patience for taking the pill that will be required to right-size the Argentine government. But so far, and there are certain things about him I don't like. I think he's a bit of a rightist underneath everything. But the truth is, if he made himself irrelevant, he could be a rightist if he wanted to, and he wouldn't harm the country whatsoever. The idea that he is saying to Argentina, my goal is to make myself irrelevant. My goal is for you to run yourself. My goal is to restore private property rights and right-size government at zero. Makes him, from my point of view, the brightest spot in global politics, perhaps the only bright spot in global politics.
Fascinating thoughts, and this has been a great conversation, Rick. Always appreciate you taking the time to come on the show. You have a private placement boot camp coming up. That will have already gone live by the time this is published. There will be replays available. And as you mentioned before we hit record, it's very legacy content. People can watch it and get something out of it at any time. So maybe you could give us a rundown on what the private placement boot camp is about, and tell us about your portfolio grading service as well.
Let's do it in reverse order. The portfolio grading service is timeless and it's free. Anybody who likes what I have to say about natural resource investing and wants to personalize it can go to my website, ruralinvestmentmedia.com. List your natural resource stocks there, and I'll personally rank them if I follow them, ranking them 1 to 10, 1 being best, 10 being worst. I'll also comment on individual issues if I think my comments have any value. While you're there, drop some questions. There's a question and comment section there. Once again, ruleinvestmentmedia.com. List your natural resource stocks. I'll personally rank them. No charge, no obligation. The boot camp is different. The boot camp, I'm going to make you work if you come. This boot camp is worthwhile for accredited investors or aspiring accredited investors. This is not an entertainment product. This is not for tourists. This is for people who want to understand everything possible about the technique of private placement investing. Equity private placement, convertible preferred private placements, and debt private placements. We'll be talking about how to participate in private placements in Canada from an American perspective, how to participate in private placements in Australia from an international perspective. We'll talk about how to get access to private placements, what to look out for in a private placement, how to structure private placements, how to monetize the various benefits that come from private placements. This will be an 8-hour deep dive into private placements. You will have access to the recordings of the boot camp for 12 months, and the information is truly timeless. If you master the art of private placements, you'll be utilizing the information that you get from this boot camp for 10 years. Truly timeless information. It costs $99 US, and there's an absolutely gold-plated money-back guarantee. If you attend the private placement boot camp, either live or on a deferred basis, and you don't think that the 8 hours of hard work we put you through is worth the money we charged you, email me and I'll give you your money back. No questions asked. I would prefer, if I failed you somehow, that you tell me how I failed, but there's no requirement that you do so. But once again, this is not an entertainment product. This is going to be hard work. This is going to be a very deep dive. This is useful for serious natural resource investors, both on the debt and on the equity side.
Great. Well, I'm going to put links to both ruleinvestmentmedia.com for people who want their portfolios graded, as well as the link to a place where people can find a replay of the private placements bootcamp. Rick, as always, thank you so much for coming on the show and sharing your knowledge with the audience.
Jesse, it's a pleasure. I enjoy these interviews, and I like talking through you to your audience.
And thank you for joining us today. As a reminder, this episode was brought to you by ARC Silver Gold Osmium. For all your precious metals needs, head to arcsgo.com and contact owner Ian Everard today at 307-264-9441 or by email at ian@arcsgo.com, and make sure to tell him that Commodity Culture sent you. And I'll see you guys in the next episode. Commodity Culture is a series on commodities and natural resources. If you would like to see more, be sure to subscribe and hit the bell notification so you're always up to date with the latest episodes.